Good morning, retail traders. I'm Wasboardjim with a sneaky snake trading strategy, and today I'm going to bring you meta, and I'm going to show you indicators that would get you in the trade before everybody else. And we're going to start off with meta. Sneaky snake trading strategy is a strategy that I built about chart patterns, moving averages, and being in the now. And last week in the now, we had the pow thing. So here's meta. I pointed out to the room on the sell-off on Thursday that we had 3 black crows on meta on the hour time frame. Now, 3 black crows are 3 engulfing candles, one right after another. You can see them right here. And we had a tweezer bottom, which would give you great enough idea to go ahead and take that trade on 1 hour time frame. What is 3 black crows, one would ask? And we're going to bring that up right now. 3 black crows definition of how to use the pattern. And this is basically all you need to know. 3 black crows is a phase used to describe a bearish candlestick pattern that may predict the reversal of an uptrend. So, you're coming down, you got 3 black crows, you could possibly consolidate at that 3rd crow and bounce right back up, back to the 1st crow. And that's exactly what happened. We had 3 black crows, and then we opened up that morning with a hammer, and she went ahead and broke that resistance of that there tweezer top. We had a tweezer bottom. So that's an indicator to maybe go ahead and jump in the trade and swing it, or wait the next day and see what kind of pattern you get right out of the gate on meta. It was pretty much oversold. It's had earnings. They're investing big time in AI. Let me see if I can pull this up. We had earnings back here, and that's been plenty of time for it to consolidate. And I called this trade out also. Little breakout here. So we had 1, 2, 3, 4, almost 5 weeks of consolidation. And then we had the pow thing go on, and the market pulled back some on that for 5 days in a row. Meta did. So I come in Friday morning. I put this on the 1 minute time frame, and I'm looking for a flag ready to open. I want to take this trade. So we have what you call falling wedge. You take your price line or your trend line, go from the body of that candle to the body of that one. Then you take the body of this one right here and run it to the body of that. And that's called a fallen wedge. It's almost descending, but this candle body is lower than that body, and that means that I'm going to go ahead and take this trade on the count of 3. So we got 1, 2, and then the 3rd body hits right here. And down at the bottom we have 1, 2. Then we get something that could be a leading indicator telling you that this thing could be bullish. The body did not pull back and hit that trend line, which I call that a higher low. And that to me is an indicator that this thing could be bullish. So we had 3 red candles here on the 1 minute, and then we had a hammer, and that held with a higher low from the previous low. And then we counted to 3, and we were able to get out of this trade. We had a nice little dragonfly here. That's a nice candle right there for the bottom. And we have a gravestone. These are both dojis, and it ran on up and broke out of that trend. So this is called a falling wedge. If you can count to 3, you can trade with me. If you can count to 4, you just might make a little bit more. If you count to 5, you might take a nosedive. So we went ahead and numbered this as 3 with a higher low. I always say that higher low means everything when you're looking at a stock. See, if this thing would have come down here and hit this 3, the body, I still would have probably liked the trade, but I would have waited for it to identify if I had any candlesticks that I could take and run this up to the upside. Here we have gravestone and a dragonfly, and she went ahead and broke on up and broke out of that third time we hit that body on that there triangle. So that's a falling wedge. And she went ahead and just had a real nice breakout the rest of the day. We had a harsh sell-off on Thursday. Real harsh, real, and I called it a flash crash. I said I wouldn't be surprised if we bounce back up. We got a 3-day holiday coming up this week. I wouldn't be surprised if this thing bounces back up. This was just a big flush to start off the new week with a green day, and I'm hoping tomorrow, Tuesday, will be a green day. We got tomorrow off. So always remember them 2 flags. 3 black crows, I've been calling a lot of it. Especially when you're at a high resistance, people are going to take profit. Let me put this on the hour. People are going to take profit. So if you can identify them, these are each on an hour candle frame. So this thing sold off for 3 hours in a row after a big old bounce to the 200. And then we had a tweezer top and we had the tweezer bottom. So this was a great opportunity to get in real early and take a risk, and then maybe add on the next day, or sell it at open if you think it was going to dip. 3 black crows with a falling wedge at open. And where was the resistance? So you pull up that 1 hour time frame again, and you can see resistance is a head and shoulders right here. You got this here resistance bar right here. So you draw price line all the way straight across, and you draw one right here. And that's going to be your resistance channel. So you come in here Friday morning and you hit that first resistance, you want to get out of the trade. As long as it's respecting 9 EMA, the moving average, you keep yourself in the trade. I mean, you have 2 different stop losses you could set here, the 9 or the 21. Below that, and then we hit the 200 again, and we had another 1, 2, 3 right into close, back up to that resistance line that I pointed out on the 5-day 5-minute, 5-day 1-minute, or hour. I forgot what I saw it at. It was probably the hour. Yeah, it was the hour. Blah. So that's a resistance channel. We come in tomorrow, Tuesday, we got to break 481.89, or we got to respect 478.08, get on up there and start playing in that channel and build out and break out. Or she pulls back and hits this previous high right here and tries to find a support level. And that would be a pretty nice little spot to take that trade. But we're going to be watching it on Tuesday. I just wanted to point this out, the strategy. 3 black crows, tweezer bottom, and then a symmetrical flag right at open. Now, this is going to be a hint and a trick. You want to see what kind of flag you open up with here at open. That could be the leading indicator. See, another confirmation you had on this 1, 2, 3. Is that a 2? Did I type in 2 in there? I sure did, didn't I? We're going to change that because I got to have perfection. You want to see what kind of flag you open up with. Now, this one had also a 1, 2, 3, and it also had the 200 SMA right down here, and it cuddled up against that 200 SMA on the 1 minute time frame, which has been another great indicator to take that trade. So you had the 3 black crows, which could be a possible reversal pattern candlestick pattern. Then you had the falling wedge off the 200 SMA. You have 3 confirmations to take that trade. The more you have, the more confirmations you have, the better trade you're going to get. And I count to 5 on the confirmations. That's it, retail traders. Now, I'm going to go ahead and stick this link down below, and it's going to give you a description on both the 3 black crows, a little description on how to trade the 3 black crows, and you can do your homework here with the falling wedge. And I like going to this here website. It's called Stock Charts. I call it my school. You just type in what you want to learn, and they'll pull something up, and you can learn how to trade them. Falling wedge is one of my favorite patterns. It really is when it comes to a guaranteed bounce. Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And have a great day.